Hello, everybody, and welcome into this week's episode of the Magnify Wealth podcast. I'm Cameron Gannon. I'm here with my co-host,
Scott Gannon.
This week on the Magnify Wealth podcast, we're going to talk a little bit about the flexibility of infinite banking. So to get things kicked off, if it's your first time here, I'm just going to give a quick little definition on what infinite banking actually is. So infinite banking, the infinite banking concept, is a process that allows someone to become their own banker. It's taught by Nelson Nash in his book, Becoming Your Own Banker, and it explains how whole life insurance policies, when structured properly, can actually build a store of cash that is an asset on your balance sheet and can be borrowed against in the same way the bank borrows money from you and me to go lend out to someone else. So you're actually taking the function of the banker and putting it in your own hands. So this can allow you to, one, create your own tax-free lending system to finance large purchases, investments, that sort of thing. It can help you generate personal wealth when used to purchase real estate, businesses, or other investments, and it can also, when you're within your own business, it can be your own financing vehicle. So that's a crash course definition of what infinite banking is. So I'm going to turn things over to Scott to kind of wrap this segment up.
Yeah, so now generally we suggest, and I'm going to go through an example a little bit later here where this isn't the case, but we suggest that you use your infinite banking system for investments and or emergencies. And for buying liabilities, we tend to think that there's other ways to do it, that you're buying a car or whatever, taking vacations, and you're going backwards on that. If there's other ways to do it, then yeah, sure, go ahead and do it. That's not going to improve your banking system, but your banking system does allow you to do that.
The only issue being you're taking away from your own liquidity within your banking system that can be used for other things.
Exactly, and that's we always want to have that money available, as like I say, for emergencies or opportunities. But the key thing here is infinite banking can be used to meet your goals no matter how they change. So it's kind of one of those things that's inevitable. It really doesn't matter what you want out of life and how that changes. It's going to be a stalwart that will continue to build for you over time.
Instead of one, big 30, 40 year plan, it's really 30 or 40 1-year plans that you can continue
great example.
Making flex, changing over the course of time.
Exactly.
So why is infinite banking so flexible? Well, the first thing is when structured properly, there's actually premium flexibility. You hear life insurance, this is what you're paying, it's going up in 10 years, et cetera, et cetera. But when structured properly, an infinite banking policy allows premium flexibility, meaning there's a range in the premiums there's some quotation marks there, have to, and what you can put in. As well, there's flexibility in, if you can't pay the premium 1 year, you can take what's called automatic premium loan, which is basically a policy loan in the same way any other policy loan works, except it's going towards your premium. And as well, over time, once the dividends are actually snowballing and becoming large enough, they can pay the premium for you. So your policy might say you're paying till 100, but we're really planning to pay for 10 years, and then for the next 30 or 40 years, well, the dividends end up paying the premium for you.
Permanent vacation or permanent premium vacation.
Exactly.
If you want it and or need it. And secondly, there's flexibility with again the liquidity. We talked about that earlier, and what you're doing is building a pool of cash, not all that different to a bank account, except that it grows preferred interest rate as well as tax-free. So this money just keeps accumulating, never going backwards, and it's always available to you, no questions asked. It's not about asking to borrow against your own policy. It's about ordering it. And of course, there's other flexibility with that. I guess I should get into that too. The payments, and so there's no required payments. Payments are flexible. So actually, I think we'll get into that later, will we?
Yeah, but also to add on to what you're saying, because there's no questions asked, there's flexibility in your investment opportunities. What are you doing with the money? Is it buying a real estate investment? Is it investing in a business that you really know, but the bank probably doesn't have too good of an idea of because they're in the business of banking? Well, the good thing is you make the decisions you want to make with these policy loans because, again, like you said, there's no questions asked. Well, what if you're a car collector? What if you're a car collector and you see this car that you think, oh, I can buy this for 200 grand and sell it for $500,000? Well, great, you can finance this car with your policy because nobody's asking the question. You make your decisions. You have control. Do what you're good at.
Great example. And that's really what we're talking about is the next thing about the flexibility is the investment opportunities, what Cameron was just talking about. And like another one to do is we always talk about is investing in yourself, right? So that may or may not pay immediate dividends, but it certainly can pay you a return. I mean, a simple example is even somebody that's not a business owner, maybe a teacher, and they go and take a master's degree and they automatically get it might cost them $10,000 or $12,000 to do the education, but they immediately get $10,000 or $15,000 added to their annual salary. That's a good investment. So lastly, you want to address the cash flow?
Yeah, so you kind of started talking about earlier and we shelved it till now, but you control your own cash flow. So you control how you borrow. So when you borrow, how much, as long as it can be up to 90% of the cash flow you have. You choose how you repay it. If you repay it by, you can do a monthly payment. You can decide I'm going to pay it all back at once in 3 years from now. You can decide I'm going to do a monthly payment. But then 1 month I want to put more in, or I want to put less in, or I want to put none in. You can make those decisions, and you could even take out a loan and not pay it back with no plan to pay it back. Maybe you get the cash and you want to, or someday your life becomes complete and the death benefit will pay down the loan before it goes out to your beneficiaries. And then finally, the last bit of cash flow control, if you will, is you get to use that cash value over and over and over. So as long as you pay it back, you're replenishing your store so that it's available to you next time. So it becomes a cycle, like we talk about the velocity of money.
Keep money moving.
Yeah, you're able to cycle this in, out, and continue to build that wealth around your life.
Constantly expanding your wealth and your cash flow. So, and just to add on to that, Cameron mentioned about as long as you pay it back, the good thing about it though is if you keep rolling in your premiums and so on, there's new equity available to you all the time, even if you haven't paid it back yet. So it's just a growing asset, and it works great. So talking about control. So over traditional banking, infinite banking has more control. Traditional financing, obviously, and investment methods, that's obvious with what we just discussed. So I'm just going to give you a quick example of a recent scenario I ran into with a client, and my client was dealing with a bit of a quandary. Really needed a new vehicle and was trying to buy a rental property at the same time as well. Had just gone through self-employed person and she went through a slow period. So she was a little worried about having the obligation of a payment and wanting to make sure everybody was happy, or basically in her family stayed happy. So we kind of came up with the idea was this, you have the cash available to you in the insurance policy, and we also want we want to keep your debt service ratio down as well, to get approved for the rental property, as well as, again, guarding against those slow months and not being able to make a payment, or actually being able to make it, but at the same time not worrying about whether you're flexible or not. So what we decided to do was go ahead, shop, pay cash for the vehicle, and once she is into her rental property, then she's kind of safe to go ahead and finance it again through other means. and or just pay it down the way she is. But again, if there is favorable financing still available after she purchases it, yeah, sure, we'll do it that way just to maintain her liquidity for opportunities. But this is just an area of an example of when actually buying a liability is beneficial to use infinite banking.
Yeah, she needed cash, so that she could keep it off the debt service ratio. Well, there's access to cash.
Exactly.
Simple as that. So that is sort of the rundown of the flexibility of IBC. So to remember, we have premium flexibility. We have flexibility in how you access the cash, flexibility in how you replenish the cash, and flexibility in what that cash does. It's flexibility in every single way. There is infinite banking, there's infinite possibilities in the system. So I think that just about wraps us up. So I want to let you guys know, please do investigate this process. It is absolutely worth it.
Easy 30, 45 minutes to get an initial understanding of this. And it really is, like I impress upon people all the time, it doesn't matter what you're already doing. This is an add-on. You can do this and continue doing whatever else you're doing. And frankly, it will save you thousands over time in lost opportunity.
Please do check out the description. We have our link there for our 20-point maximizer assessment, where we can dig a little bit deeper on how the infinite banking process can help you. That is the Magnify Wealth podcast for this week. We'll see you guys next week. Signing off, Cameron Gannon and
Scott Gannon. Have a great week.
Thanks for tuning in to the Magnify Wealth podcast with Scott Gannon. Remember to subscribe on YouTube or your favorite podcast platform for more insights on the infinite banking concept. Until next time, remember, immediate action is the most efficient way to achieve your goals.